Hey there, it's Mark from Caliber Home Loans. It is Friday, August 2nd, and it looks like it's going to be a great weekend. It was certainly a beautiful day today. Hope you guys had a great day and are looking for a good weekend and a profitable weekend for any open houses you'll be holding open. So let's talk about the market a little bit. The Fed reduced rates a quarter point this week on Wednesday, and as we had predicted, and I had told anybody that cared to listen, that it was already built into the system. So Wednesday the Fed reduced rates and really not much happened. So this is today. Today's been pretty flat. Let's take a look at the week. So Wednesday, right after they announced that there was an aberration, buying and selling of bonds, but then it flattened right out again. So nothing really happened until Thursday, when the administration announced that they were going to tack on another, I don't remember, I think 10% tariffs on $300 billion of Chinese goods, this time on consumer goods, not on manufacturing goods. So the stock markets went from up 380 to down 265 in a matter of minutes. So when that happens, all that money flows out of the stock market into the bond market. And when you get that many buyers into the bond market, it forces the price of the bonds up, which causes the yields to go down. Remember, it's an inverted relationship. So this is what we see. We see this pop up right here, and this is where the markets reacted to the tariff announcement. And then, for the most part today, we kind of ended up where we started. There was a little bit of in and out earlier today, but again, it's been pretty flat today. So over the last month, you can see again this big spike here, which caused rates to go down. So rates to go down this week. And then since the beginning of the year, we're still on this trend of upward pricing, which means that the rates have dropped. So rates are in a great place. If people are thinking about refinancing and waiting, I think that their time has come. I think it's time to pull the trigger. I'm not sure how much lower they'll go. The 10-year is all the way down to 1.85, which is as low as it's been in a long time. So I think most of the news of the tariffs has shaken out. So I don't think that we're going to see much more volatility in that unless there's additional announcements or additional tariffs that we don't know about. So I've also included in today's email a link for the realtors, a link for optimizing an open house. I thought it was a very interesting video, and you can sign in and get a set of documents, checklist to help you with that. I thought it was interesting. If I was a realtor, I'd probably do a lot of these things to help increase the flow to your open houses. Again, I'll be around all weekend. FHA. So FHA is changing their cash out refinance rules. Currently it's at 85% loan to value. So if you've got a house that's worth 100 grand, your maximum mortgage amount on a cash out is 85,000. They're changing that to 80%. So after September 1st, your maximum mortgage on that house would be 80,000. So it will impact some people. If you know anybody that's got an FHA that can't qualify for a conventional, but needs to pull some cash out for some debt consolidation or whatever, and they need to max out as much as they can get out, now's the time. Rates are low, and they're still under that 85% rule. Again, the new rule goes into effect September 1st. So other than that, there really isn't much more news in the markets or for program changes. I'll let you know if there is. You guys have a great weekend. I'll be around 248-705-8431. Give me a shout if you need anything. Thanks a lot and have a great weekend.